talk about. So another way to look at a cap rate, it would be the real estate equivalent of the stock market's return on investment. So a cap rate is a ratio between the amount of income produced by a property to the original capital invested or its current value. So it tells you the percentage of the investment's value that is profit. So really simple, cap rate is a profitability metric that measures income versus property value. So this is an important distinction because it's limited to only that income. And it doesn't consider other things that us real estate investors have come to know and love, and that are things like appreciation and mortgage paydown. But we'll get into that later because there is another metric that factors all of that in. So cap rate is your net operating income, which we just talked about, divided by the asset value. So similarly, you can find out the property value by dividing the cap rate or the market cap rate by your actual or estimated net operating income. So net operating income divided by property cost or value gives you your cap rate. When you're in an acquisition phase, this will be the property's sale price. Later on, you can use your local realtor, broker, or the estimated value on real estate websites like Zillow. So generally speaking, the higher the cap rate, the higher the risk. So this is because a high cap rate indicates that you have put less capital into the investment to generate larger returns. And a cap rate is simply a back of the napkin way to understand the profitability of an investment. I, for instance, will only take on new real estate development projects if I can have a cap rate of 6 or higher. In some major cities, you'll hear about cap rate compression, which simply means prices are high, meaning people are paying more for the same or less income or net operating income. So I hope this makes sense. Again, feel free to jump in the chat room with any questions. I know I've said all that about cap rates, but the easiest way to remember what a cap rate is it's your return on investment per annum linked only to the income generated by that asset. So now I'll turn it over to Victor to show us an example of an actual property's cap rate.
Thank you, Brad. We'll pull up Chris's portfolio once again. And here we are back on the dashboard for Chris, the property 5213 Kevin's Way. And again, we have a simple square here with the effective cap rate of 5.3. We also have the visible market value of the property and the net operating income. As Brad mentioned, it is per annum. If you do want to calculate it, it's great to toggle to the annual net operating income, and you can make the calculations. If you do have a cap rate, one cool feature that we have is if we go back to the property details page, you could customize your valuation by cap rate, excuse me. So you could increase the cap rate and get a different market value for that property.